Hello and welcome to this deep dive. Before we jump in, if you find this useful, please do give us a follow, a like, or share. It really helps us out.
It does indeed.
So today we're digging into two big names on the Thai Stock Exchange, set in the home improvement space, Dohome and Home Product Center, or Hmpro.
That's right. We've got a stack of material here, company presentations, analyst reports, news clippings.
Yeah, we're looking at Hmpro's 9M24 results, a financial report on Dohome's Q1 2025, set trade opinions, a Thai piece from mid-2024, and an Finance Thai article comparing H1 2024 numbers. Quite a bit to unpack.
Definitely. So the mission today is to pull out the key numbers, sure, but also understand their strategies and, compare them side by side.
And maybe get a sense of, well, which one might be considered the, let's say, more dynamic or perhaps younger in terms of its current growth phase. We'll see what the data suggests. Let's kick things off with Home Product Center, Hmpro.
Okay, Hmpro. Their tagline is, "We make a better living." And they're not just the Hmpro stores people know.
Right, it's a bigger group.
Exactly. You got Hmpro Retail, Mega Home, which is also retail, Market Village shopping malls, a DC service center, operations in Malaysia and Vietnam, and even a related real estate entity, Once.com. It's quite diversified.
That's a pretty broad portfolio. So looking at their results up to Q3 2024, what stood out?
Well, one thing was their rental and service income in Q3 24. It was up 7.7% compared to the year before.
Okay, and what was driving that?
Mostly higher rent from their own stores and the Market Village malls. Apparently the ones in tourist spots did particularly well, so tourism recovery seems to be helping them there.
Makes sense. Did the report mention the overall economic mood?
Yes, it did. It referenced the Consumer Confidence Index from the University of the Thai Chamber of Commerce. In September 2024, it apparently hit its lowest point since February that year.
Oof, not great.
No. People were worried about, slow growth, flooding, cost of living, even with government stimulus measures. So a challenging backdrop for consumers.
Right, context is important. Okay, let's fast forward a bit to the Finance Thai piece from May 2025, looking at the first half of 2024. What were the headline figures?
For H1 2024, Hmpro's net profit was THB 3,334.54 million. That was up about 3.2% year on year.
Okay, modest profit growth.
And revenue.
Total revenue for those 6 months was THB 37,322.83 million. That was up even less, just 0.45% compared to H1 2023. Pretty flat, really.
Okay. How about the second quarter specifically, Q2 2024?
Q2 net profit was THB 1,621.7 million. That's almost perfectly flat year on year, up only 0.11%.
Wow. Okay.
But their total revenue in Q2 actually went down by 1.94% year on year to THB 18,535.25 million.
Revenue down, but profit flat. What did they say caused the revenue dip?
They pointed to a few things. Slower domestic consumption, the rainy season starting early. They had to cancel a Hmpro fair in Chiang Mai. Oh, and even roadworks near one branch. Sort of a mix of factors.
Sounds like a few operational bumps in the road, literally in one case. What about their other income streams in Q2? Rental income, for example. Yeah, rental income was down slightly, 1.21%, which they linked to that canceled fair.
Okay.
But their other income went up by 4.43%. They said that was thanks to more promotional activities with partners, maybe trying to offset the fair cancellation impact a bit.
Seems plausible. Were they still opening new stores during this quarter?
They were. 2 new ones in Q2 2024. A Hmpro in Lamphun and a Mega Home in Udon Thani.
So keeping up the expansion.
Yep. That brought their total count to 90 Hmpro stores, 5 smaller Hmpro S1s, 28 Mega Homes, and 7 stores over in Malaysia. Still growing the physical network.
Got it. And the Finance Thai piece, did it give a snapshot of their market standing, stock performance, market cap?
It did. As of May 2025, the stock price year-to-date was down 30.34%. Dividend yield was 4.91%, which is pretty decent.
Yeah.
Market cap is substantial, over THB 107 billion. And Land and Houses is a major shareholder, which is worth noting. Big backing.
Definitely a heavyweight. Now let's bring in that analyst view from Thai back in July 2024. They were looking ahead to Q2 24 results. What was the expectation for Hmpro then?
At that point, analysts thought Hmpro's Q2 profit would be pretty stable compared to the previous year, but maybe not as strong as Dohome or Global.
Why was that?
They figured higher SG&A costs selling general admin expenses from opening those new branches would probably weigh on profits a bit.
Yeah.
Expansion costs money up front.
True. What about same-store sales growth, SSSG, that measure of organic growth at existing stores?
They predicted Hmpro would have the lowest SSG of the three they compared, somewhere in the range of -5% to -7% for Q2.
Ouch.
Yeah, not great. But they did see potential for improvement in the second half of 2024. They were pinning hopes on government budget disbursement kicking in and boosting spending.
Okay, so a tough Q2 expected, but hope for a later boost from government spending. Right, let's pivot to Dohome. We've got that financial report from May 2025 on their Q1 2025 results.
Okay, Dohome. For Q1 2025, their net profit was THB 245 million. Now that was up a big 53.1% from the previous quarter, Q4 24.
That sounds pretty good. Quarter on quarter anyway.
It does. But the analyst noted Q1 is usually the high season for construction materials, so a sequential jump isn't that surprising.
Yeah.
Year on year compared to Q1 24, profit was basically flat, up just 0.3%. And that was actually a bit below what analysts were hoping for.
Ah, okay, flat year on year. And that tied into their same-store sales growth.
Exactly. Their SSSG for Q1 25 was positive, but just barely, at plus 0.45%.
So some growth, but not much.
Right. It was their second quarter in a row with positive SSSG, but it had slowed down from the plus 1.5% they saw in Q4 24. The report mentioned a slowdown in March, especially around Bangkok, where SSSG actually declined by high single digits.
Interesting regional split there. Other areas did better.
Yeah, apparently other regions outside the capital area saw positive SSSG, so definitely some geographic differences in performance.
Did Dohome open new stores in Q1 25 like Hmpro did in the previous period?
No, actually. They didn't open any new ones in Q1 25. They stayed at 24 large L-format stores and 15 of the smaller Togo branches.
But revenue still grew.
It did. Sales and service revenue was up 6.0% quarter-on-quarter and 1.5% year-on-year, reaching THB 8.1 billion. So growth even without new store contribution in that specific quarter.
Okay. What about margins, gross profit margins specifically?
Their gross margin in Q1 25 was 17.6%. That was down slightly, about 20 basis points or 0.2% compared to Q1 24.
And why was that?
The report said it was mainly due to the sales mix. They sold a higher proportion of construction materials, which tend to have lower margins. That category made up about 50% of revenue, compared to maybe 47–48% the year before. Also, private brand sales dipped a little as a percentage of revenue.
Got it. So margin pressure from the product mix. How were they doing on managing costs, the SG&A?
They looked pretty good, actually. SG&A expenses were well controlled, coming in at 12.9% of revenue, which was similar to the previous year. Good cost discipline there.
Always good to see. What was the analyst's immediate outlook after Q1, looking at April, May 25?
The feeling was that weak consumer spending was probably continuing. SSSG looked like it was flat in April and maybe slightly negative in early May.
So, still challenging.
Yeah. But interestingly, the weather helped a bit. Milder weather meant less demand for things like air conditioners, which apparently helped their gross margin in April compared to March. Funny how weather plays in.
It does. How did that Q1 profit stack up against the analyst's full-year forecast for 2025?
Well, the Q1 profit was only about 29% of the analyst's full-year number. Historically, Q1 usually contributes more like 39%.
Ah, so they started the year a bit behind the typical pace.
Exactly, which led the analyst to suggest there might be some downside risk to their full-year forecast, which was assuming 3% SSSG for the whole year. Small changes in SSG can make a difference to the bottom line.
Right. Despite that, they kept a buy rating.
They did, yeah. Maintained a BUI with a target price of THB 7.50 based on a DCF valuation.
Okay. And what were the main risks the analyst flagged for?
A few things. Lower steel prices impacting them, maybe having too much stock to clear. Lower farm income hitting spending power. Problems with government spending actually happening. Their private brand mix or margins weakening. And of course, expenses potentially rising more than expected. The usual suspects, sort of.
A fair list of potential hurdles. Okay, let's switch back to that A-Finance Thai article and look at Dohome's first half of 2024. How did they perform then?
Right. H1 2024 for Dohome, net profit was THB 436.92 million. Now, that was a really big jump, up 46.7% compared to H1 2023.
Wow. Okay, strong profit growth. What about revenue in that period?
Interestingly, total revenue for H1 24 actually decreased slightly by 2.7% year-on-year to THB 16,108.09 million.
Huh. So profit way up, but revenue slightly down. How does that work?
Good question. Let's look at Q2 2024 specifically. Net profit then was THB 192.59 million. That was that massive 389% increase year-on-year we heard analysts expected.
Yeah, that's huge.
Their Q2 total revenue was THB $8,090.96 million, which was actually up slightly, 0.5% year-on-year. The article said this small revenue increase came mainly from new branches. But the big story was on the profit side.
So what boosted the profit so much if revenue was only up slightly?
Two key things mentioned. A big jump in other income. They got more support from suppliers and had some foreign exchange gains. And crucially, their gross profit margin improved significantly in Q2.
Ah, the margin. How much did it improve?
It went from 14% in Q2 2023 up to 17.5% in Q2 2024 across all their product categories. That's a really substantial improvement and a major driver of that profit leap.
That explains a lot. Did they have higher costs offsetting that margin gain at all?
They did have higher SG&A expenses in Q2 24, partly from opening new stores, both the big ones and the smaller Togo format, and also from spending more on promotions, so investing in growth again.
Right. Did they open stores in Q2 24?
Yes, they opened 2 new small Togo branches in that quarter. That brought their totals at the end of Q2 24 to 24 large stores and 13 of the small Togo ones.
So they're definitely pursuing that smaller format strategy alongside the big boxes. What about their market snapshot from that May 25 article?
For Dohome, year-to-date stock price decline was 16.03% less of a drop than Hmpro experienced over the same period. Dividend yield was tiny, just 0.05%.
Very different from Hmpro's yield.
Very different. Market cap was around THB 33 billion, and the major shareholder is Dohome Holding Co., Ltd. So, as we noted, considerably smaller market cap than Hmpro.
Yeah, much smaller. Let's quickly circle back to that Tansataki analyst forecast from July 24 for Dohome's Q2 24. Did they call that profit jump?
They absolutely did. They were expecting Dohome to show the strongest profit growth in Q2, forecasting that huge 393% year-on-year increase.
And the reviews they gave?
Pretty much what happened. A low base from the previous year, and importantly, expectations of a wider gross margin, especially from selling more of their own private label goods.
Spot on then. What did they predict for Dohome's Q2 SSSG back then?
They expected it to be negative, somewhere between -5% and -6%. So, anticipating that revenue growth would come from new stores, not necessarily existing ones.
Okay.
And just like with Hmpro, they were also looking towards the second half of 2024, hoping government spending would give things a lift.
Right, that consistent theme again. Okay, we've looked at both companies through various lenses. Let's try and pull it together now with a direct comparison.
Sure. So, profitability, first half of 24. Hmpro made a lot more profit in absolute bad, over 3.3 billion versus Dohome's 437 million, no contest there.
But
Dohome's percentage profit growth was much, much higher, especially that Q2 jump. So Hmpro is the bigger profit engine right now, but Dohome showed way more growth momentum in that period.
which feeds into that idea of maybe Dohome being in an earlier, faster growth phase, despite being smaller overall.
Exactly. In terms of sheer size, measured by revenue, Hmpro is clearly bigger, over 37 billion in H124 revenue, compared to Dohome's 16 billion.
Double the size, roughly.
Yeah, about that. And their Q2 24 revenue trends were opposite. Hmpro's dipped slightly, Dohome's edged up, thanks to new stores.
And their expansion strategies look different, too.
They do. Hmpro seems focused on its large formats, Hmpro and Megahome, plus its other ventures like malls. Dohome has the large stores, but is also clearly pushing the smaller Togo format, maybe trying to get into different locations or serve different needs.
What about those gross margins? Seemed like a key difference.
Yeah, Dohome had that really nice jump in gross margin in Q2 24, up to 17.5%. We didn't get an exact comparable figure for Hmpro in Q2 24 from these sources, but the later Q1 25 report suggested Hmpro's margin was under slight pressure then. So potentially Dohome was doing better on margins, at least during that specific period.
Market performance, both stocks down year to date as of May 25, but Dohome less so.
Right. Dohome down about 16%, Hmpro down over 30%, but Hmpro pays a much better dividend while Dohome's is negligible. Different appeal for investors there. And again, Hmpro's market cap is significantly larger.
And analyst sentiment seemed a bit mixed or evolving.
Well, back in mid-2024, analysts were definitely more excited about Dohome's near-term profit growth potential. By May 2025, financiers still had a buy on Dohome, though maybe with slightly tempered expectations. But you also had another analyst noting Hmpro looks attractively valued. So different perspectives.
And finally, they're both facing the same economic winds, right? Consumer confidence, government spending, the property market.
Absolutely. Both are exposed to those big factors. Plus things like weather, promotions, their ability to navigate all that is key.
Okay, this has been really insightful. Let's try and crystallize the main takeaways.
Okay, so Hmpro, Bigger scale, higher absolute profit in H124, diverse operations, solid dividend, but slower recent growth, and a bigger stock price dip, YTD May 25. Continued expansion of large formats.
And Dohome?
Dohome. Smaller overall, much lower absolute profit, but significantly higher percentage profit growth in H124, driven by that strong Q2 margin improvement. Pursuing a dual expansion strategy with large and small stores. Much smaller dividend, but less of a stock price decline in that period. You could argue, based on that faster growth rate and smaller size, it fits the profile of a more junior player potentially on a steeper climb, though obviously starting from a lower base.
Right. Both navigating a tricky economy, both banking on government spending to help later in the year, but doing it with different strategies.
Exactly.
So, a final thought for everyone listening. Considering Hmpro's scale and diversification versus Dohome's potentially more aggressive growth focus and margin gains, how will they fare long term? What happens as consumer behavior keeps shifting, maybe more online? And how important will developing those private label brands be for their future profitability? Lots to think about there.
Definitely food for thought.
Okay, that wraps up our deep dive for today. Finally, if there are other stocks or topics you'd like us to look into, please let us know. And again, a quick reminder to follow, like, and share if you found this helpful. It genuinely supports the team. Thanks for listening.
Thanks, everyone.